This is Bruce for Spartan Capital Markets. I'm going to take a quick look at this week's market newsletter and kind of go through it real quick for some of you who are newer to this technical analysis and trading, and just kind of help you read it a little bit better. We're going to cover this week Aussie dollar, euro dollar, dollar yen, Bitcoin, gold, and natural gas. Now, I'm going to go through this pretty quick. We start with the Aussie dollar. The Aussie dollar is at a key support zone shown by this uptrend, this long-term downtrend, and a Fibonacci level, and the completion of a measured move where this second move down off the high matches the decline in the first move down. So there's a high probability we have support here that should hold and turn price higher. If it doesn't, then we're looking at reaching the lower level, and that becomes more bearish. This line right here should not be broken, but it could go down to the second zone right here, and that's discussed in the write-up. Next, we have the euro dollar. And the euro dollar, similar situation. We're at key support here with the 200 moving average blue line, some Fibonacci confluence, and the completion of a measured move is not there yet. That's down here. Nevertheless, the 200 is pretty significant support. I would anticipate a bounce off this level. If we do not bounce and break through the bottom instead, then we're probably going to the next lower level, which is discussed in the write-up. After that, we have the dollar yen. The dollar yen is the opposite. We've hit a potential resistance zone short term based on the Fibonacci confluence. I would anticipate some type of pullback before we go higher, and I would expect we go higher because overall we have a nice bullish uptrend going on here. We've held the 12-period exponential moving average here, the orange line, and we've broken through the 200 moving average. We consolidated above it, and the 12-period is about to break above the 200. Once that pullback is done, though, in the dollar yen, I would anticipate a continuation to the upside. Next, we have Bitcoin. Bitcoin, we're looking at a weekly chart. Overall, there's not much going on with Bitcoin. It's stuck within a consolidation zone between the 200-week moving average and the 12-week moving average down below it here. So we're either going to stay between these wedge lines here or these channel lines here, the orange line and then this blue line going forward until we break out and start to trend higher again, which I would anticipate that we will do. There's a number of levels that are noted on to watch for a pullback where we might find support to look for entries. Then we move into geometric analysis, and for those who are less familiar with this, this is pretty sophisticated analysis. There's a lot of different levels to it. We're only showing a little bit of what has been looked at in order to arrive at the conclusion. But kind of briefly, what's happening here is we're using the dual vector, or Scott is using the dual vector concentric tool and creating a triangle. The area of that triangle is 951.51, and then he uses that to break up the distance to looking for harmonics on the way down. How do we know that might be useful? Because you can see here that we'll start with the black dash lines, the 3.5, finds support, finds resistance, finds support, and so forth. Then the 6.5 line, support. The 9.5 line we're at right now. So there's a relationship between, it shows that the current low has a relationship to previous swing lows. The same thing for the whole, those are the half levels, and these red lines are the whole levels. The red lines again, also resistance, resistance, support, support, resistance that we broke through. So not only did we break off this bottom, and you see support here on the red line, not only did we break off this low, we've also broke through the next potential resistance, which is the 2416, and we closed above it last week. So that's bullish. We anticipate continuation to the upside in natural gas, and some of the upside levels and targets to watch are shown in the chart and discussed in the write-up. And then finally, we have gold. Gold, I'll let you read the discussion on the analysis. It's a little tricky, but essentially we're doing something similar. and analyzing, or Scott is, I should say, is analyzing the earlier part of the downtrend, and then finding those mathematical relationships and bringing them forward. And what these rectangles are showing is that there is a connection between the relationship within this rectangle in the green, within the B in the rectangle in the green, and then, I'm sorry, the triangle, and then the C triangle in the green, that there's a relationship. And what this shows is that we anticipate some significant support down to 1806 zone or so, which we're essentially right there now, and a subsequent rally up to some levels that are discussed in the write-up. So that's it for now, traders. Have a great week, and we'll talk to you again next week.